Hello, welcome to the June 2021 video edition of the Iowa General Fund Monthly Revenue Memo. My name is Jeff Robinson, Senior Fiscal Analyst for the Iowa Legislative Services Agency, the nonpartisan support agency of the Iowa Legislature. This video covers Iowa General Fund revenue for fiscal year 2021 through the end of June. I will also discuss employment and inflation levels and how those two items currently compare to a long-term history. Looking at fiscal year 2021 through June 30, and on a fiscal year basis, net general fund revenue has increased 16.3% and more than $1.1 billion when compared to the same period for fiscal year 2020. Individual income tax and sales tax both increased more than 13% for the period, while corporate income tax increased more than 50%. There are two major factors that contributed to the large revenue increase for fiscal year 2021 year-to-date. First, the economic consequences of the 2020 coronavirus pandemic significantly reduced general fund revenue deposits during the months of April through June of 2020. COVID-19 resulted in job losses, business closures, and reduced overall economic activity. Contributing to this factor was the due date delay during 2020 for individual and corporate income tax payments until the end of July. The return in 2021 to a more normal economy with more normal tax due dates has been a significant factor in the large 2021 net revenue gain. The portion of this large gain that is associated with tax due date delays will disappear before the books are closed on fiscal year 2021. And second, federal economic stimulus programs continued to bolster the finances of individuals, businesses, and farmers during all of fiscal year 2021, with a significant contribution to this factor arriving to the federal legislation that was enacted in March of 2021. With fiscal year 2021 through the end of June up more than $1.1 billion, and with the projected net revenue growth for the year set at just under $150 million, it is clear that fiscal year 2021 will end with revenue well in excess of the existing projection. However, the books on fiscal year 2021 will not be closed until the second half of September. During the intervening time, the current $1.1 billion growth will fade somewhat as last year's tax due date changes provided a boost to fiscal year 2020 revenue during the July through September time period, a boost that will not be present this year. Although the large revenue increase that is likely to be the result once fiscal year 2021 books are closed represents welcome news after the dark economic scenario that played out in calendar year 2020, there are at least two economic factors that remain unresolved at this time. Those factors being the overall level of employment and the recent rise in inflation. This chart presents the level of employment in Iowa since 2000. The employment numbers come from the household survey, and that is the process that determines the unemployment rate. The household survey is a monthly government survey that asks respondents if they have a job, and if not, whether they are actively seeking employment. The first recent item of note on this chart is that Iowa employment, as reported through the household survey, indicates that employment peaked several months before the obvious employment losses caused by COVID-19. The peak occurred with the October 2019 survey. The second recent item of note is that Iowa employment remains 109,000 below that October 2019 peak, and the recent pace of recovery, it will take another 2 years before Iowa employment once again reaches the prior peak. There are several inflation calculations that are released each month, all of which are showing a recent troubling spike in U.S. inflation. The following discussion is based on the unadjusted consumer price index for urban consumers as reported monthly by the Federal Bureau of Labor Statistics. This chart provides a consumer price history for the past 21 years. The recent event that is evident and perhaps concerning is the increase experienced over recent months. The year-over-year increase in consumer prices has recently spiked to 5%, a rate of increase that hasn't occurred since 2008. However, this level of increase should be viewed in the perspective of the recent pandemic. Last year at this time, consumer prices were increasing at a minuscule 0.1% annual pace when economic demand contracted as a result of COVID-19. This chart provides a second line that shows the average rate of price increases over a 2-year period. The rate of increase over the past 2 years has averaged 2.6%, a rate that is more in line with the levels of the past 21 years. To add additional perspective, this final chart displays annual and 2-year average inflation for the past 60 years. The current inflation levels pale in comparison to what was experienced during the latter part of the 1960s through the early 1990s. To summarize, fiscal year 2021 net general fund revenue growth is significantly positive through the end of June and is well above the level of projected growth for the fiscal year. While the current calculated increase is expected to fade somewhat by the time the books are closed for the year, a significant revenue surplus is expected for fiscal year 2021. Although the revenue news for fiscal year 2021 is universally positive, the U.S. and Iowa economies still face problems as the level of employment is significantly below pre-pandemic peaks and inflation has spiked in recent months. Of those two problems, depressed employment levels appear to be the biggest economic concern as recent federal efforts to stimulate the economy wane, and the economy will be forced to eliminate the employment gap without enhanced government stimulus. I very much appreciate your time and interest in Iowa General Fund revenue. Goodbye, have a great summer, and please check out the next monthly video memo that will be posted in early August.